This is Duke University.
Each quarter for the last 79 quarters, Duke University and CFO magazine have polled CFOs from around the globe to ask them what the economy looks like from the business perspective. This quarter we got over 1,000 responses, about half of them from the United States. This quarter the results show a good news, not so good news outcome. On the good news front, employment in the United States, the growth should be strong all the way through 2016. If you look at the numbers, we expect employment growth to be over 200,000 employees per month on average. That is enough growth that we'll actually see the unemployment rate fall below 5%. So that's good news. On the not so good news front, the manufacturing employment actually might go down by about 1%. So that's a bit worrisome. On top of that, business spending, capital expenditures, will increase but only a small amount in 2016. Why is that? Well, the energy sector had been doing quite a lot of capital spending, but now with the price of oil so low, the energy sector says they're going to cut capital spending by about 40%. If you average across all the industries, there will be a small increase in capital spending, but only about 2.6%. So that's going to be weaker capital spending growth than what we've experienced. And on top of the energy sector being weaker, we also have our exports, the equipment we might export overseas to China or Latin America. That'll be weaker because those regions are weaker. And the US dollar is stronger, making exports more expensive. It all adds up to weak capital spending right now. It seems likely right now that the Federal Reserve Bank will continue increasing interest rates into 2016, okay? Now the question is, how much and how soon? On the one hand, businesses have told us that moderate increases in interest rates shouldn't be too much of a problem. It shouldn't derail them. On the other hand, the recent economic news that we just talked about is actually has some soft spots in it. And so our advice to the Fed would be, yes, you're going to increase interest rates, but be cautious. Don't raise them too much too soon. Taking a step back and looking around the globe, we see Latin America very weak, in particular Brazil, expecting to cut employment and capital spending by more than 5%. So deep recession in Brazil coming up in the next year. Mexico is sort of the bright spot in Latin America, probably benefiting from close ties to the US and Canada. In Europe, we're seeing things actually solidifying, if anything, getting a bit stronger. So Europe is actually a bright spot. Africa, things are also solidifying, but from a very weak position. So Africa still continues to be weak, but maybe we're turning the corner. Asia is interesting. The overall growth rate in Asia is still relatively strong, but it's less than what we've seen in recent years. And so the whole world economy is still really adjusting to that. And in particular, China is actually taking a pause on increasing employment and increasing capital spending over the next year. This quarter, when we talked to European CFOs, we asked them the business view on the refugee situation with a lot of migrants and refugees coming into European countries. On net, the businesses actually say this will probably be a positive thing, especially in the demographic sense. There will be some downward pressure on wages and some extra labor market pressures with more employees. Now, from a business perspective, that's not necessarily a bad thing, but the European economies will have to kind of work their way through some downward pressure on wages. So to hear more about the information about refugees or the whole global economic outlook, go to cfosurvey.org. I'll talk to you again in March.